Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Tuesday, January the 25th, 2017. My name is Doug McKay. I am the Quantum Leap Futures head moderator and the founder. Each morning we get together and take a look at the market, macro to micro. We take a look at the structure of the market, then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses, four main hypotheses, which we use to see what the market actually does. Nobody can tell you what the market's going to do. So what we do is we create a plan, if that, then, and then once the market shows us what it is doing and who's in control, then we can execute on the plan that fits to the market, not try to fit the market to our plan. This is a subscription room. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you're interested in checking us out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. We do everything here live every day in the pre-market, and then we do live trading and analysis during the course of the trading day. This is not a commercial venture. Okay, so taking a look at the news. 9:45 we've got flash manufacturing PMI. 10 o'clock we've got existing homes sales. We've got Richmond manufacturing. 10:30 CV leading index out of Australia. There's really not a lot of trade news other than the existing homes and Richmond manufacturing, flash manufacturing. Now remember that it's it's Trump's second day in office. He's got a list of mandates, executive orders that he started issuing yesterday. So there is going to be headline news. So please keep your news services open and monitor the news for the next little while, because anything he does or says could affect the market greatly. So yesterday, our main hypothesis was an open auction in range, a move up to take out the naked VPOC, and then failure to break out of value or a false breakout, and then rotate down towards the 59.75, chop around in the 59 to 57 area, and then push through down to our main target, which was at that naked VPOC at 52.75, and coming down into the 52 area. What we didn't expect is for the buyers to step back in there. I was expecting them to close down here, and of course they rotated back up and came right back up into the 62 area and back inside of the prior day range. So mainly, Hypo 1 played out, and then we kind of got a bit of Hypo 2, which was a false breakout and then a rotation up. Market is still completely in balance. Overnight, look at this overnight session. Very, very tight, very good Gaussian distribution. We've got balance. We spent a lot of time yesterday in the 60s, and we've accepted that price. There is a large order that's been sitting. I've been watching this order sitting down at the 60.25, and this has been there. If you look at this order. This order has been sitting there, okay, right through all of the Globex, okay, this morning. So I believe that this order is real. The question is, are they going to rotate down in the RTH or even before the RTH to pick this guy up? I don't think this is a spoof. He's been sitting solid down there. So just keep an eye on that one right there. Let's step back and take a look at the earnings for a second. We have had, we are starting earnings seasons, of course. Everything looked pretty good. All the big names, Alibaba, Horizon, Johnson & Johnson, Lockheed, 3M, SAP, they're all, coming out with pretty solid earnings. Taking a look at the aftermarket. Why is it? I want aftermarket. Okay. We've got Capital One, we've got Alcoa, we've got Texas Instruments, Seagate, Stryker. Those are Logitech. Those are the big ones that that I can see today. So Yahoo did come out yesterday, and it was a beat as well. So far in earnings, we've had a pretty good start of earnings seasons. Each morning I like to start my day with a simple candlestick chart, and I start with the monthly. I use a 9 EMA, 20 SMA. What I'm looking for is strength of the trend in the different timelines, time frames. I'm looking for slope and separation for strength of trend, where the trend is being challenged. Beautiful upward multi-year trend challenge at the end of 15, beginning of 16. We got the continuation pattern. We had this this rising three candlestick on the monthly that we were watching, which is a continuation pattern, and sure enough, we completed the pattern and got the continuation, went in and put a new all-time high. We've got slope and separation on the monthly. We don't even begin to challenge the trend until we get down into the 2170 area. Going to the weekly, talked about this yesterday, is that we were one time framing up, higher lows on the weekly. Yesterday we came down and violated the weekly. We do have 2 inside weeks. This week will not be an inside week, but so far our week open is at 66, and we're trading below it. A challenge to this trend on the weekly will take us down into the 22.43.86. Remember, the open of the year for the full session is 22.40.75. For the RTH session, it's 22.52. So if we get below, I think the key line in the sand is still that 38.25. But if we get below the 2 opens, then we could see some weakness come in and get our first meaningful pullback. But as long as we hold above, the trend is in control to the upside on this time frame. But we are seeing a bit of weakness the last 2.5 weeks so far. Or 2 weeks and 1 day, really. Going to the daily, you can see that the daily is basically a symmetrical triangle, and we're in consolidation mode and going sideways. We're inside of the 9 and the 20 right now, getting a bit of a MA hug, and this is a decision point. Either we break out and get continuation pattern, or we break down and we get the possible start of a downward trend. So really indecision right here, and that's the balance that we're seeing on the daily when we get to the composite chart. Going to the 4-hour, you can see that we've had this this slow grind down. It's actually looking, I was trying to draw, it looks like to me, just on a glance, like a widening descending wedge, but it's got all these tails, so it's hard to draw accurately. But we are trying to break this downward trend. We're above the 9 and the 20 right now, but all in all, I think that we're more consolidation and trying to hold value right now on the 4-hour. Going to the 1-hour, you can see that we were going sideways most of the Globex. We did dip down in the RTH yesterday, but now we're starting a possible upward trend. We've got slope and separation right now to the upside, so we could be trying to get back up into balance, which is up at 65, of course. And then if we can break out of the microcomposite value area high up at that 70, then we can get the real continuation up. Going to the 30-minute, basically the same thing, consolidation, a little bit of a cup and handle. I was looking at this as a possible inverted head and shoulder, left shoulder, head, right shoulder. It's not really a real pleasing pattern. You actually got double shoulders, which you know, sometimes you can see that. So just neckline I would put somewhere in around 63, 64 area. But really, we need to get above that 65 and get the continuation. But in the most part, the 30-minute is trying to start a trend up as well. And as we move down into the 15-minute, you can see same thing there. Possible cup forming here, so that handle might be a move down to pick up that order down there, although that would violate it, right? Because that order's sitting at 60 1/4. So that I'm still wondering if they're going to go get that guy. Anyway, the trend is up. If you draw a trend line, you might want to just draw a little trend line from here, and watch a break below that. But for the main part, we're moving up on the 15-minute and starting an upward trend. And you see on the 5-minute, this cup is very strong. This is actually a strong move right now, up back into balance. But you can see that the trend is up on the 5-minute. All right, so taking a look at the structure, nothing has changed. My hypothesis is basically going to be very similar to what we've been in for the last week. We've got this microcomposite VPOC that starts on the 8th of December. We've got very strong kurtosis around the 65, our microcomposite VPOC. It keeps shifting back and forth between 64.50, 64.75, and 65. Right now it's sitting at 65. I can bring yesterday's volume in. I should do that. And, we're getting all these buying wicks. Look at the number of dojis that we're seeing. We got all of these dojis, and this is a major battle, okay, for, price acceptance and who's going to take control. This is going to come out of here very, very strong. For the length of time that we've been in here and the amount of inventory that's going off, one side is going to be wrong and they are going to get their face peeled. So just be very careful. When we do break out and we identify a trend day, do not, and today could be it. We don't know when it's going to happen. If we break out and we get into that trend day, do not try to fade that trend, because that could turn out to be a 30 to 40 point day or more based on how strong this balance has been. Key levels to keep an eye at: start a warning line at 68. That's the smaller time frame. Once we got back inside of the, we dipped down to that 27.75 area, and then got back inside of balance. Once we were back inside of balance, the value area high is 68, so that's your warning line to the upside, but the value area high itself is at 70. So I'm watching that 70. Anything above 70, I'm looking for the continuation up and a move up into that week high, the double top at 77. We've had we have had lower lows since we put in that double top. We had the 74 high, we had the 73.50 high, then we did put in 2 days ago, we put in the 72.75. So every time we come up into the 74, we're failing one tick lower, which could be false, failed auctions here, and we could resolve ourselves to the downside rather to the upside. But if we do break out of the 70, I think that the fourth time up there is going to be the charm, and they'll break out into the 77. Areas to watch below 57 area is the value area low for the shorter time frame microcomposite, but the big one is going to be 53, and of course with yesterday dipping down into that 5150, I'd be watching for 5175. I'd be watching for a break below there. Below that, target the 4850, but the big target below is back down here at the 44. Remember that the year open is at 4075, and the RTH open is 52. Yeah, 52. And our key line in the sand is 38. Anything below 38, I'm looking for a bigger move back down to the 34 and 27, but the big destination is still the breakout day, the 50% significant breakout, a 50% retracement of the significant breakout, which is at 19 and a quarter. So that's really where I'm expecting to come down. Anything below that, okay, we got a lot of thin area and unauctioned territory. Look for a move back down to the 2210, and most likely down into test the 2200, and then once we're below 2200 at 2198 and a quarter, which is our microcomposite VPOC of the balance that we broke out of. Okay, on the breakout day. So that's the big picture. Overnight, we have a balanced inventory. We're coming up. We're actually looking like we're going to make a new Globex high before the open. So, I'll put it in right now at 64 and a quarter, but we're most likely going to do a make and break on the 64 and a quarter and come back up and open up somewhere up here in balance once again. Our overnight low is 59.50. Our VPOC is not going to shift, so 61.50. And that's all the information we're going to get from overnight. Again, overnight inventory is neutral to net positive, but more neutral than anything, very balanced around that 61.75. So what are our main hypotheses? My main hypotheses, let's first take a look at the levels. Obviously, 65 is going to be balance and the magnet. I'm going to be using 67.50 as a breakout of the prior day. I'm going to be targeting that 68.50 as my first target. And then, of course, the 70 is the value area high. Right now, our 20-period daily full session ATR is running at 1494. So off of the low overnight, our upside daily ATR target is shifting up to 74.50. And off of the current overnight high of 64 and a quarter, our downside daily ATR full session target is down at 49 and a quarter. All right, and then the levels we want to pay attention to is the value area. I can't really use the value area high. I'm going to use the 63. Basically just above that 62.75, break below that, I'm going to be targeting this this naked close at 62, and then once we're inside of value, I'll be targeting the LVN right here at 59 and just below the overnight low, and then if we get below the overnight low, down to the VPOC from yesterday at 56.50. And then the value area low is 55. Then we've got the 51.75. All the levels are pretty much the same because of the fact that, well, we've been in this area for a while. So my main hypothesis today is going to flip based on where we are in terms of coming up into the magnet and where we're going to open. So I'm looking for an open auction in range. I'm looking for a move down into, take out the naked VPOC, I push through, pick up that order at 60 and a quarter, and somewhere between 60 and a quarter and 56, I'm looking for a responsive buying step in and then start walking us up, with the main target being this 70 above, and then a push through into the 74 and possible breakout to new all-time highs above 77. We've got range capabilities to do that, and if the breakout is to the upside, it could get very strong. Hypo 2 is an open auction in range, false breakout or a failure to breakout. And then, somewhere between 70 and 67.50, we find responsive sellers and walk ourselves down towards that 56.50 as the main target, chop around in here, and then push down through and come down and close somewhere down here between 49 and a quarter and 44. Hypo 3 is a open test drive. So an open and test the value area, close the naked VPOC and the range high, and then get a strong move out and go up and immediately break that 70 area, chop around in the 72, 74, and then push through to new all-time highs and get a trend day up, a continuation breakout day, and possibly even come up into the high 80s, maybe low 90s, maybe even 2300. Hypo 4 is a open auction in range, failure to break out. Oh, by the way, Hypo 3 could be an open drive as well, whereas one side takes control right on the open and blasts us off. Hypo 4 is an open auction in range, failure to break out, and then have a failure day, come down into the 55 to 52 area, then push through, get through the 44 area and come down and close somewhere between the 35 and the 44 area and close down here and test the year open, possibly even a little bit lower down into the 27s, and then basically a breakout day to the downside. Hypo 3 and Hypo 4 have equal weights. So does Hypo 1 and Hypo 2. We just don't know, okay, when it's going to break. So we have to have that Hypo 3 and Hypo 4 within our hypotheses in order to know that if we do break out in one direction, it could be a trend day, and we have to be cognizant of that fact. Hypo 1 and Hypo 2, they're equally weighted because, well, we're in balance. And, if we're going to have another balanced day, we just don't know which direction the skew is going to be, whether it's going to be to the upside or the downside. So just be patient. Wait for them to show you who's in control. Keep your powder dry, and don't try to force trades right now. I do want to bring up gold and make a note on gold. Gold is finding balance. What happens when we find balance? Well, we got a major occurrence happening on gold. This composite goes all the way back to 2008, 10/10/2008. And for the longest time, our microcomposite VPOC was up at the 66 area. And it is now shifted down to the 15. So we are at a major magnet right now. We're liable to stick around here and chop around this area, as we just sit on this this long-term price acceptance. So we're liable to chop around here. But it's still going to offer some opportunities. But the days are probably going to get a little bit tighter. We've been in price discovery now for this whole move up, and it's been great trading gold. I've been focusing a lot on gold lately, but now it might kind of die off, and as we chop around here. Key levels to keep an eye on, the 2020 and the 23 to the upside. Above that, look for them to push through to the 26. To the downside, keep an eye on if we break below this 13, look for them to push down through to test the 08. Anything below 08, target the 4 and the next big target below, which is the 1200 and the 94, 95 area just below. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.